Good afternoon, ladies and gentlemen, and thank you for attending this virtual meeting. I'm pleased to welcome you to Kilburn Engineering Limited's Q3 FY26 earnings webinar. We have with us Mr. Ranjit Lala, Managing Director, Mr. Amritanshu Khaitan, Director, Mr. Sachin Vijayakar, Chief Financial Officer, Mr. K. Vijay Shankar Kartha, Managing Director, ME Energy Private Limited, and Mr. Amol Monga, Whole-Time Director, Monga Strayfield Private Limited. Friends, this virtual meeting is being recorded for compliance reasons, and during the course of discussion, there may be certain forward-looking statements. These must be viewed in conjunction with the risks that the company faces. We'll have the opening remarks from Mr. Lala, followed by a Q&A session. Thank you, and over to you, Mr. Lala.
Thank you, Naveen. Good afternoon to all. We welcome you all to Q3 2026 earnings call and updates on the company and its subsidiaries. Kilburn and its subsidiaries continue to deliver yet another consistent quarterly performance for Q3. A brief on the financials is as follows. Kilburn had a top line of 105 crores for the quarter Q3 with an operating EBITDA of 25%. This is a year-on-year growth of 15% on top line and 16% on EBITDA. On a consolidated basis, we achieved a top line of 157 crores and EBITDA of 24%. As a group, we ended Q3 with an order backlog of 495 crores, and we have received orders and LOIs worth 70 crores from 1st Jan till date. For the current year, we continue to have a healthy inquiry pipeline of 4,000 crores plus at a consolidated level, indicating a good traction across various sectors. We continue to maintain our target of 50% growth in top line over the last year, which comes to around revenue of 625 to 650 crores. The current margin profile looks quite sustainable, and we expect to close the year with EBITDA of around 22 to 23%. Furthermore, we have commenced the expansion of Kilburn factory at Saravali, which is expected to complete in the next 6 to 8 months. Also, we have commenced phase 2 expansion at ME Energy at Pune. The third update which I would like to give you is we have formed a joint venture company, Kilburn East End Private Limited, for offering specialized site and shop fabrication services to EPC companies for various projects in refineries, petrochemicals, steel chemicals, etc. With this, I would hand over back to Naveen.
Thank you, Mr. Lala. Friends, we'll open the floor for the Q&A session. Anyone wishing to ask a question, request you to please raise your hand and we'll take your question. We'll take the first question from Sagar Shah. Sagar, please go ahead. Sagar? I've enabled your mic. Please unmute yourself and go ahead.
Now am I audible?
Yes, Sagar.
Yes,
Loud and clear. Please go ahead.
Yes. Yeah, sure. Sir, first of all, many congratulations for excellent set of earnings once again for Kilburn. It has been a phenomenal journey actually since last 2 years with you, sir. Now coming on to the operating performance, actually, my first question was related to our capacities. Now, with regards to Kilburn on a standalone level, Ambernath plant, and also ME Energy. So the potential to right now we are clocking on a standalone level approximately revenues of approximately of around 300 crores actually. On a standalone level, I'm saying actually on a consolidated level, on a Kilburn level. So on that front, is it safe to assume that are we fully booked out at least at our Ambernath plant as well as our Saravali plant, and also regards to ME Energy and ME Energy and Monga Strayfield? I wanted to know what percentage of the orders actually are you executing on ME Energy's plant for Kilburn actually, and what percentage of the ME Energy's orders are being executed in that particular land? So that is, and the next question was related to Monga Stayfield. What is the revenue for Monga Stayfield in the 9 months FY26?
Well, Sagar, you know very well that we have always focused on console numbers. So we avoid giving the split. But okay, for the benefit, for your benefit, I would like to mention that I will give more the numbers which I'm expecting by the end of the year. So when we mentioned about 625 to 650 crores for Kilburn, 95 crores is what is 90 to 95 crores is what is expected from Monga Strayfield. Between 100 to 105 crores is expected from ME Energy, and rest would be from Kilburn. This I'm talking as we see on 31st March. As of now, I think, this reply should suffice your requirement. Secondly, you mentioned about, capacity utilization or whether we are fully booked. Okay. Yes, we are well booked, I would say. And the expansions that we are talking about, we expect both these expansions to get completed in next, let's say, 6 to 8 months. And all this is being done to get to the level of 800 crores plus. In the past, we have mentioned that next year we are targeting a top line of 800 crores. And subsequently, we would like to be 1,000 crore company. So all these efforts are being put in that direction.
Yeah, so basically got your point, sir. But means right, the kind of orders that you are getting, I can see the order 58 crore order also that you placed on your corporate announcement. I means more of tea dryers, more of paddle dryers. I think you are getting certain orders from. So, something like, is it safe to assume that right now Kilburn on a standalone level, rather than garnering high volume orders, high value orders actually, as for rotary tires, but it is getting some low value orders and focusing on something like you can say smaller products and garnering higher revenue. Is it safe to assume?
No. So we will come, you mentioned about tea dry. So tea dry is a very seasonal market, and it's typically from November to March. Yeah. So that time we do have a spike. We are targeting orders of all values, anything from 40 lakhs in tea dryers to let's say 50, 60, 70 crores or 100 crores as well. I mean, you have seen that in the past, and the effort still continues. In fact, I would say for ME Energy, we had got two huge orders, around 50 crores each. I don't have the exact numbers, but together they were around 100 crores, and we are targeting more orders in that range. So it would not be correct to assume that we are targeting low value orders.
And in the
Okay.
announcement of 58 crores, 40 crores was for rotary drive itself.
Okay. So, actually, I saw your export orders also. So, basically, how much percentage of the total order book is from Birla Carbon, sir? Can you specify that, please?
There are two different things. Export orders, you're talking about, this year we expect a turnover of around 30% from exports. Okay, in the current financial year. Now, how much is for Birla Carbon? And Birla Carbon need not be only for export. It could be for the local requirement also. I don't have the numbers immediately. Maybe Sachin, do you have the numbers of?
So what only I can say, out of our closing order book of Kilburn standalone of around 300 crores, around 70 crores is export related.
Okay, and how much is it from Birla Carbon? Do you have that number, sir?
No, sir.
Okay, I'll take
It's
it
a split
offline. No
between
problem.
various companies. It is not just Birla Carbon.
Acha, okay. Now, I think you got a upgrade from a credit rating company also, Acute, actually, in this particular quarter. So, right now, the cost of funds for ours, it's anything around 11.54%. So, can we assume a lower cost of funds in the following quarters, sir, due to the upgrade in the credit rating?
Yeah, definitely we have approached our lenders, banks, based on this rating, and they are working on it. So definitely we expect a reduction from the existing.
Okay. And can you specify about the JV, sir? That I think you have just in this particular quarter, you have signed a JV with. You just mentioned in your opening remarks also. But I wanted to understand means how is it different this piping fabrication, erection, structural fabrication, and you all these activities from rolling, welding, fabrication you have been doing in house. For 2 years back you had lack of space, but now you have the bandwidth also to do the entire activities in house. Now this subsidiary on board means what is the game? What is the plan of action? Means are you looking to acquire another land to basically what is for these different activities, or is it the same level of activities that the Kilburn on a standalone level is doing actually right now?
So what we have been doing in the factories is more of building equipments in the factory and supplying it to various customers and sites and assembling them. Now, there is a business wherein a lot of site services are required, and like fabrication, a little bit of manufacturing at site, and we are focusing only on the specialized activities, and the focus is on erecting static and rotary equipment, pipe spools, a little bit of structural erection, yeah, for oil and gas, refinery, petrochemicals, and chemicals, such factories. This kind of work is normally offloaded by EPC companies like L&T to smaller players. And this is a business which we are looking at. And to begin with, we would like to go one step at a time. So in the first year, we expect, which would be in the next financial year, we expect to get an order in the range of 50 crores, and we would like to execute that. Subsequently, we will see how things move, and then we will grow accordingly.
Okay, so these activities which you just mentioned, these are not right now being executed by Kilburn, but they've been outsourced to L&T actually. That you just said, piping fabrication, structural fabrication, and pre-erection commissioning support, right, for mechanical
Right.
works. Okay, okay. My last question, sir, was related to the tax rate. It's a data keeping question that in this particular quarter, also in the last quarter, we had a higher tax outgo. Actually, we have been paying tax at around 28%. So, what is the tax rate that we will have to assume, sir, going
It will
forward?
be the normal 27% tax rate at the level. 25 plus surcharge amount.
Right, right. Okay, okay. Fine, sir. Thank you so much, and all the best.
Thank you.
Thank you, Sagar. We'll take the next question from Abhijit Mitra. Abhijit, please unmute yourself and go ahead.
Yeah, thanks for taking my question. And I was just going through the last quarter transcript. I could see some of the comments from Mr. Lala and Amritangshu also that probably the margin profile around 25-26% will be sort of sustained through the end of the year, and probably in the medium term also. So the drop in EBITDA margins this quarter, I know it's a mix of project, but how do you look at it? Do you see you can go back to that 25-26% range in the medium term, or you feel this is the margin profile to expect?
So to the best of my knowledge, 25-26% was for last quarter, but we had mentioned that through the year we will maintain EBITDA margin of 22 to 23%. We have been maintaining that for the last 3 quarters, or the last 2 quarters and this quarter. So 25 to 26 happened in last quarter, but through the year it would be around 22 to 23%, or rather by end of the year it will be 22 to 23%.
Okay, so we should sort of, model around 23%. and sort of, I mean, that is the medium term guidance as well, right? As in beyond the year also.
So beyond the year, we have mentioned it will be 20+%. But yes, within the organization, we have put a benchmark for 23. But for all our discussions, I have said 20+%.
Okay, got it. And in terms of order inflows on a consolidated level, we are looking at a 443 crores for the 9 months. What kind of order inflows can we sort of expect for the year? And I mean, with this kind of order inflows, do you feel, achieving the 800 crores revenue guidance can be a challenge?
No, not really. So we have closed as on 31st December, the open order of around 495 crores. But by the end of the year, based on the orders that have been received so far, the orders expected, minus the execution that would happen, we would open the order book on 1st of April in the range of 500 crores, 500 plus. It'll be very difficult for me to give a more accurate number, but we can assume that we will open at 500 plus. Plus whatever comes in the first quarter. Yeah, so that should help us in navigating into the 800 crore mark. Again, my dear friend, at this point of time, we are talking about numbers based on the scenario today. Yeah, so we have set ourselves a target of 800 crores for next financial year.
Got it, understood. And regarding the follow through orders from OCPL, any sort of color on that you can share?
Well, discussions are on, yeah, and it takes some time for all these inquiries to culminate into orders, but discussions are on.
Got it. Okay, thanks. That's all from my side. Wish you all the best.
Thank you.
Thank you. Friends, anyone wishing to ask a question, request you to please raise your hand so that we can unmute you and take it. Just give me a second, please. We will take the next question from Uzair Larry. Uzair, please unmute yourself and go ahead.
Yeah, am I audible?
Yes, you are.
Yes,
Please go.
Uzair.
Yeah. Hi, sir. Congrats on good set of numbers. I wanted to ask regarding export orders. So what is the EBITDA margin in the export orders? Are there the EBITDA margins higher or is it at par with the domestic orders?
All the export orders which we bag are definitely, on a competitive basis. Not necessarily that we are L1, but the margins are by and large with the domestic orders. There can be some cases we have mentioned in the past that OCP order from Morocco was a high margin order, but it depends from time to time, customer to customer. Yeah, so it's very difficult to really say that all export orders have a higher margin.
All right. And sir, one last question related to the 650 crore target for this year. So in Q4, we should be around 200 crores of revenue if we want to target 650 crores. Is it right?
Right.
Okay. Thanks.
So 175 to 200. I mean 625 to 650. Let's see where we land. Yes, but you're right. The top line should be in the range of 175 to 200 crores.
Thank you so much.
Thank you, Uzair. Friends, may I request you to please raise your hand and ask your questions rather than posting them on the chat, or you may just post it on the Q&A board. Mr. Lala, may I take a question on the Q&A board?
Yes, please go ahead.
It's from Ankur. A few questions. Will we be able to achieve 650 to 700 crores in FY26?
I'm more confident on a number between 625 to 650.
Okay. Second, The margin has decreased from
Ranjit,
26.
just to add, the 625 to 650 is the number which meets our guidance of 50% growth.
Yeah, so this is based on the 50% growth over last year, what guidance we had given.
Okay.
But if we are able to cross 650 crores, we will not stop ourselves. Yeah, please go ahead.
The second question, the margin has decreased from 26% to 23% this quarter. What is the reason for this decline, and what margin do we expect for in Q4 and FY27?
Consistently, we have been mentioning that margins will change from quarter to quarter based on the type of orders being executed. And the guidance that we had provided for the whole year was in the range of 22 to 23%. We stick to that.
The last question from Ankur. Do you expect cash flows to improve in FY27?
Sachin, can you take that?
Yeah, they will. We expect to improve the cash flows. Are expected to improve next year with better banking facilities, enhancement of banking facilities. Definitely, they will be increased.
There are some questions in chat. Friends, if I miss out your question, I request you to either raise your hand or post them on the Q&A board. Jose, do you have a follow-up question? Your hand is raised.
Yeah, one last question.
Yeah, please go ahead.
Sir, as you said that margins fluctuate a bit depending on the type of orders we receive on quarter. So can you share some insights, like some of the areas where margins are high, so that in particular quarter we report 26 to 28% of EBITDA margin?
No, sir, it's very difficult to give such a projection. Yeah. And in the last quarter, we had relatively high because we executed the OCP JESA order for Morocco. A part of it is still being, executed in the current quarter. So this will change. And each order has different margins. It's very difficult to give a projection as to which quarter it can be high or low. And that's why we give quite a narrow range. So when I talk about 22 to 23%, we have taken into account all the possible ups and downs and any surprises and all those things. But I can assure of one thing: at any point, we try our best to improve our margins, whether it is through, scaling up of activities, efficiencies in our processes, trying to work out, good prices for the raw material. That is something which we do consistently. And that's where you find these fluctuations.
All right. Thank you so much.
Thank you, Jose. Sahaj is asking what what to understand the impact of EU trade deal. Will the European machinery get cheaper for Indian clients, and can it impact our order book?
Right. So I will try to answer this question from both the angles: EU-India trade deal and the US-India trade deal, because I'm sure somebody would have a question on that. I don't think Europe is in that position today to offer cheaper equipment. In fact, it is the other way around. In fact, if they want to increase their capacities, they would look at equipment from India and other countries like China, Vietnam, etc. So in a way, it's beneficial for us. Same likewise for US, if they have to import any equipment and all. So India is very well placed, and vis-a-vis even Kilburn is well placed to supply for the business that we are doing. That is drying solutions or heat recovery solutions and radio frequency dryers. So it's beneficial to us. However, this would take around 12 to 18 months for the real green shoots to be visible on the ground, because these have to be passed in their respective countries, these trade deals. I think in the EU Parliament, this has to be passed for the India-EU agreement. So by the time we really start seeing the benefits, it would be 12 to 18 months from now. But in these 12 to 18 months, a lot of groundwork can be done by companies like Kilburn in terms of tying up with technology partners or looking at potential customers, and trying to have ventures in any form. So we will work on those meanwhile.
I hope that answers your question, Sahaj. Okay. Let's take a few of them which have been posted on the chat. Daksh Malhotra has posted, Sir, when you say 800 and 1000 crores for FY27-28, what will be the EBITDA and PAT margin guidance? Also, which division, customer segment, are we seeing faster growth?
Okay, so when we talk about 800 or 1000 crores, as on date, my figure would be same 20+%. As we go forward, we'll further fine tune and let you know what the numbers look like. I do agree that when you scale up your activities, your margins improve. But at this point of time, it would be a little difficult for me to give indicators for the next financial year. So I stick to 20+%. Now, which sectors or customers are doing well? I think we are having traction across various segments. So when you look at what are the kind of inquiries we have, I can speak from that perspective. We have plenty of inquiries from petrochemicals, chemicals, soda ash, fertilizers, a little bit on nuclear, food processing, metals, recycling. So we are seeing traction on all these fronts.
I hope that answers your question. Can we take the next question from... Okay, Abhijit Mitra has a follow-up question. Abhijit, please go ahead.
Yeah, thanks for taking my question. Just want to understand what was the OCF for the first 9 months and what's the incurred capex for the first 9 months, and how much capex do you intend to do for this year?
Capex for first 9 months was around 5 crores.
So, sorry, I missed that number.
Capex was around 5 to 6 crores for the first 9 months.
Okay, and what was the operating cash flow?
What is the capex also? You can give those numbers, what we are planning for Saravli as well as for ME Energy Pune.
Cash flow, I don't have the figure in front of me.
No, capex you're saying. You said cash
The
flow.
capex, the operating cash flow figures I don't have it.
Operating cash.
Okay, and and for the full year, what's the plan in terms of planned capex? If you can share the number for the full year.
When we had planned for the full year, it was around 25 crores for Kilburn and around 10 to 12 crores for ME Energy, but we did not consume it. There was a slight delay in getting approvals for the expansion. So for all practical reasons, you can assume the same would be spilled into the next financial year. Whilst we have started the expansion in both these locations, but the capex could follow in the next financial year. The total capex for both the companies would be around 40 to 45 crores for ME Energy and Kilburn. I also want to mention that we have some capex planned for Monga Stray Field. We are waiting for the necessary inputs before we give you those numbers.
Got it. 45 crores over 2 years.
No. Over 12 months. So let's say this quarter and next 3 quarters.
Okay, got it. Understood. Thanks. That's all from my side.
Thanks, Abhijit. Okay, there's a question from Daksh Malhotra on the chat. Sir, as we are seeing a lot of euphoria around nuclear, even in our order intake, nuclear is a big contributor. Can you talk about what are we supplying and how is the space looking?
Yeah. So what are we supplying? I can give you some information because there's only a limited information which we are allowed to give out. We had one order from Nuclear Power Corporation, which was for design, engineering, manufacture and supply of pump room coolers and some vault coolers plus heavy water vapor recovery system. So, this was the solution that we are offering them. The second order was from Heavy Water Board, which is for supplying of reactors, exchangers, hydrogen pumps, and piping and structures and all. I would say it's more of a EPC kind of a supply for some special processes which have been designed by BARC. What are those processes? We are aware a little bit of it, but I will not be able to speak on that subject. How is the sector doing? We expect a lot more to happen in the coming years. These two orders which we have spoken about, we have been working on them for more than a year now. And we are working on a couple of more inquiries, which are quite at an advanced stage. But we expect a lot more to happen in this vertical or in this sector, more so after the trade deals that have happened.
Thank you, Mr. Lala. Sagar has a follow-up question. Sagar, please unmute yourself and go ahead.
Yeah, first of all, thanks for the opportunity. I just had two follow-up questions, sir. On the standalone level, for Kilburn Engineering, so we have around two plants, Saravali and Abarnath. So in FY27, when you are actually guiding for around more than 600 crores plus of revenue, 700 crores plus of revenue. So I think so. This growth will be largely led by ME Energy, right, and Monga Stayfield, right? If I'm not wrong.
No, I think there's been a growth on all the fronts. I mean, if you just look at standalone numbers of Kilburn, you are definitely seeing a growth. And if you look at Kilburn plus ME, even there we have seen a growth, and we expect that by the end of the year, a lot of revenue or top line from ME as well.
No, sir. I was talking of FY27, sir.
Oh, okay, FY27. So FY27, we expect biggest growth coming from ME Energy.
Yes, that's what I was saying, sir. Because if you're fully booked out, you have already been large orders being coming from the carbon black industry, also from nuclear and the petrochemicals. So I can hardly see any room for growth on the Kilburn level.
No, not really. No, sorry. I mean, let's keep the two things separate. The growth of Kilburn will always be there, but in 27 we are seeing a good growth coming from ME Energy, and this is based on the inquiries that we have and the stage of negotiations where we are today. So that's where I'm saying that the maximum growth will come from ME Energy.
And from the cement industry, are you expecting some orders?
Yes. From cement, from steel, from power, from a lot of areas we are expecting. Actually, Mr. Karta is also online. He can, can throw some light on that. Mr. Karta, can you tell something about ME?
Hello, Vijay sir.
Sir, you're muted, sir.
Muted.
Mr. Karta, you're muted.
Yeah, sorry. So ME Energy, we've been able to get some more orders from the cement industry after the first breakthrough with Sri Cements. And we have got during this year large orders in for the ferroalloy industry, and that is leading to more number of inquiries in metals and steel industry. And next year looks pretty good for us, and we are gearing up with a major expansion of the plant, whereby the capacity in terms of space under crane for production going up almost close to 50%. So we'll be equipped with almost double the capacity for catering to this spurt in growth. So things are looking ahead, and it's good times for us coming ahead.
Okay, sure, sir. And my last question, sir, was to Sachin, sir. There was a conversion of certain around 350,000 warrants in this quarter also. Now, actually, what I have forecasted that of the total equity share capital after the conversion of the warrants to even the public shareholders would be around 52.6 crores. Am I correct,
Right,
sir, on
5
the
crore
equity share
62 lakh.
capital?
5 crore 62 lakh shares.
Yes, yes. Yes, correct. So it comes
Yes.
up to 52 crores, 60 lakhs is the
Correct.
share capital.
Correct.
Okay. Thank you, sir. All the best.
Thank you, Sagar. Friends, anyone with a question, request you to please raise your hand. We'll unmute you and take your question. Friends, anyone with a question? Tejas, you have a question? Please unmute yourself and go ahead.
Hi, am I audible?
Yes, you are. Please go ahead.
Thank you. Thank you for the opportunity. Mr. Lala, I'm just from what I gather, and we sounded very bullish in the Q2 of this FI. I think this call has been hearing. I think we sound a little bit subdued. So, are you seeing any major challenges? Because even even if you look at the top line, obviously you always guided 50% growth. And we probably hit somewhere around maybe 620, 630, the number that you've given. But from the business perspective, are you seeing some headwinds that you're facing? Maybe not headwind, but some challenge that we're facing up in this quarter, and you feel that should percolate down maybe to the next year as well?
Well, first of all, I don't know what makes you feel that we are subdued. Is it my voice that is subdued or
No. No, so let me correct myself. So I meant that I'm used to, since I've been following with the company the last 2 years, I'm used to seeing the feel that I got is more bullish. I think this time we were more, I would say, restrained if not subdued. So I thought maybe the industry challenges
my
are a
dear
little.
friend, we've always mentioned that, in the following years from now, that is 27 and 28, we have, projected a CAGR of 25%. Okay. As of now, I don't see any challenge over there. And if you look at, where we have reached so far, from last 2 years, whatever we have projected, by and large, we have been closer to that number. So when we talk about 25% from here on, so 625, 650 crores, another 25% would be 800 crores, and then another 25% would be 1,000 crores. So those numbers we are still maintaining. See, you need to have some benchmark or some numbers in your mind when the organization is moving ahead. There can always be some plus minus here and there. Now, are we confident? We believe that we are going to achieve that number. Okay. And this is all because of the kind of inquiry pipeline we have, the traction that we have seen, in multiple verticals. A couple of months back, people had a question mark on, ME Energy's performance. I mean, now we are saying that they will be the fastest growth ones in the whole group. So the efforts are being put, the opportunities are being uncovered, and I think we are placed where we are supposed to be.
Okay.
And I'm not sounding subdued now.
No, you're not. I was just trying to. I'm just used to.
It's very difficult to give a range for a growing company. I think we must maintain that if we are able to achieve the 625 to 650 crore range, it's a 50% growth, albeit with 20% of that coming through an acquisition. Going forward, if the company can maintain a 20 to 25% range, I think that itself will be a great achievement for Kilburn, because the base itself is becoming larger.
Yeah, I understand that. And Mr. Lala, if I'm I'm asking because I'm used to the benchmark that you have set. So please pardon me if I'm maybe trying to sound a more optimistic. I think it's all the credit to the Kilburn and your team that I'm trying to do that.
I think I'm being typical for myself, by setting high benchmarks.
So the second
And
question I
that's the
have.
vital sign. Yeah, please go ahead.
Sorry, yeah. So the second question was the order book that we have, 495 closing order book that we have for
Plus 70 that we have received.
for 70 that we see. So what is the so 305, 306 is Kilburn. Do we give the split for ME and Monga in that, sir? The remaining
I'll try to see if I can give you. Sachin, can you give a split?
Yeah,
Please requesting.
ME is 170 and Monga is 20.
sorry, what is Monga, sir?
Monga is 20.
20.
20.
Okay. Sir, last question. Are we, I don't know if our companies anywhere associated with these water discharge and ZLD kind of projects, because I feel that's what's been in demand right now, or zero discharge kind of thing. Are we associated with that in any which ways?
Yeah. So both ME Energy and Kilburn are working out on opportunities in the sewage treatment plants, STPs. Yeah, both municipal and private. Not necessarily ZLDs, because if it's a municipal plant, it cannot be a ZLD. You can only treat this sewage and release it. So we are working on a couple of opportunities, and we are also looking at a couple of technologies where we can tie up. So that process is on. Maybe Mr. Karta can dwell more on that. Sir, can you give some more information, sir?
Yes, ME Energy had been working in this field of sewage treatment for various through various CPC contractors for all these municipal bodies wherever a large sewage treatment plant comes, and it is by way of supplying the required thermal equipment for the processing of sewage, and also the biogas based heating systems and engine waste heat recovery systems. So this is going on. Even in this quarter, we have booked around 5-6 crores worth order in this space. And the plants in India are going up in size. Earlier, it used to be 100 TPDs and things like this, 100 KLPDs and all that. Now it is going to be 400, 500, and we expect that in the coming years, the order intake will be much higher values and more in numbers.
Okay. Thank you, sir. Thank you for answering my questions.
Thank you.
Thank you, Tejas. We'll take the next question from Rabindra Nayak. Rabindra, please go ahead. Rabindra, please unmute yourself and go ahead. Guess there's some issue out there. We'll take the question from Karthik Bhatt. Karthik, please go ahead.
Yeah, I hope I'm audible.
Yes, you are.
Yes,
Please go
Karthik.
ahead.
Yeah. Thank you. Congratulations to the whole team for a good performance. Most of my questions have been answered. So, one question on the event participation, Chemtech World Expo event that you mentioned in the investor deck. So, if you can just speak a little bit as to have we participated in it in the past, or was it the first time, and maybe some color on the response that we received there and the nature of inquiries received and so on.
I can partially answer that question. So this is not the first time we are participating in Chemtech. We had done it for last 2 years as well. Yeah, but this was at a much bigger scale. In terms of response, I would say it was the response was overall modest to Chemtech as an exhibition. So it's got nothing to do with Kilburn or anybody else. So I mean, that's all I can say. About the inquiries, what we have generated, honestly, I don't have the information so far because it just got completed last week, and my colleagues are working out the details. So that is one part I'm not able to answer.
Okay, okay, sure. Thank you, sir.
Thank you. Ravindra, please unmute yourself and go ahead. Ravindra, it's very. Can you speak a little louder, please?
Hello.
Yes.
Yeah, am I audible?
Yes,
Yes, you are.
Please go ahead.
Yeah. Thank you, sir. Thank you for the opportunity. And can you please give a sense on this, standalone number, sector-wise, your exposure in the nuclear. I joined little late. If you have already dealt upon this, then okay. But can you please repeat it if at all you have not done that? Please, thank you. Then I will take up some questions.
Ravindra, I would not have the numbers sector-wise for standalone, but what I can recommend is that you can refer to the presentation which is in the public domain. And that will give you a fair idea as to what is the overall breakup of the orders. This is on page 7 of the presentation.
Yeah, I understand. So, can you please give the inquiry label on the sector-wise, if anything, get a sense on how the things are moving on?
See, I can name the sectors where we have inquiries. I will not be able to give you the split. So, I mentioned earlier that we have a number of inquiries from petrochemicals, chemicals, soda ash, fertilizers, metals, nuclear, we have a couple of them. Then we have recycling, and I think we have also on the offshore platforms. Yeah. So these are the verticals where we are seeing a lot of inquiries. The split, I would not know. It's very difficult to give that.
Okay, fine. Otherwise, if you see what is the inquiry level right now, what are the total inquiry level of order entire, on a consolidated basis we are working with, and what it was in last quarter. So can you get a sense on that?
So I think in the last 2 to 3 quarters, we have been having an inquiry pipeline anywhere between 3,800 to 4,000 crores. Okay, it keeps fluctuating from time to time because new inquiries are flowing in, conversions are happening. There are always some, orders won, orders lost. Yeah, but on an average through the year, we had a good inquiry pipeline of 4,000 crores at a consolidated level.
Okay, so at this moment you are working at a 4,000 crores of order pipeline, right?
Yeah.
Okay. And sir, what is the, you mentioned it is you, I believe that you are giving this indication for the not consolidated, fully consolidated. Can you give it to from the ME Energy and Monga for separately?
Well, we prefer not to, but for your benefit, I'll just give you a broad breakup. If we are talking about 650 crores, I would expect somewhere between 90 and 100 crores from Monga Straightfield, somewhere between 100 to 105 or 110 from ME Energy, and rest from Kilburn. But this is only an indicative number. Yeah.
Okay.
But we prefer not to give any split at this point of time.
Okay, fine. Sir, regarding this, you have mentioned that you will be working with a 625 to 650 crores. What would be the standalone number for, if I expected standalone number for FY26 and for the other two subsidiaries, Monga and...
I just answered that question.
Okay, so split wise, you cannot give the subsidiary wise. Anyway, in standalone, what is the expectation, sir?
450 to 500.
Okay, fine. And sir, regarding my question to CFO, what is the total cash book right now, cash in hand of the company?
Cash and bank balance as on 30th December was around 30 crores.
Okay, 30 crores.
That includes all margin, everything, whatever.
13. 13.
30.
30. Okay. And sir, what is the borrowing right now by 9 month?
It is around ranging from 9.5 to 10.5.
No. I'm not asking cost, sir. What is the total gross borrowing?
Borrowing.
Hmm.
Gross borrowing is around 100 crores plus, including
100.
what we have borrowed from our subsidiary also.
Okay. And sir, equity, so there are supposed to be around 995 crores of equity warrants to be, money to come. So whether it is already received or it is
No, it
in the
will come by May 26.
Okay. May
Partially
26.
will come, balance will come by May 26.
Okay. So 49 crore has already come. The 95 crores is expected by May 9. May 26. Hello?
Yes,
Yes,
around
sir.
138 crores is yet to come in. 130 crores.
Okay. So out of that, you mentioned the total capital expenditure this year would be around standalone to 20 crores. And the other subsidiaries, sir?
We already mentioned between the two companies, it will be around 40 crores
40
of
crores.
capital expenditure over the next 12 months.
Okay. Thank you. And I will come back in the queue if at all.
Thank you, Ravindra. We'll take the next question from Priyesh Babaria. Priyesh, please go ahead. Priyesh, please unmute yourself and go ahead and ask your question.
Yeah, hi sir. Good afternoon. Am I audible?
Yes, you are.
Yeah,
Please
yeah.
go ahead.
So just wanted to understand from the perspective of order pipeline, since it is kind of flat over, let's say, last 2 to 3 quarters. First on how do you actually consider some orders as order pipeline, and why it has not been actually growing, considering the TAM that we are actually targeting at. And then the next question is with respect to let's say whatever the expansion that we are doing, would that capex would be sufficient to actually generate the revenue of 1,000 crore?
So the question number one, see, you don't see much fluctuation quarter on quarter in the inquiries pipeline. You're converting some, there are new opportunities getting, uncovered or, explored. So I just mentioned that, we have had inquiries between 3,800 to 4,000 crore and they have been consistent. So I would not say they are flat, they are consistent. Okay. Definitely as we move forward, these will grow. If you look at the last 2-3 years, we were somewhere around 600 to 800 once upon a time. From there, we have grown to 4,000. So I would request you to look at a broader period than just quarter on quarter in the last 3 quarters. That's one. Secondly, you mentioned about the expansion. This expansion is being done so that we cross the 1,000 crore mark. It is now being well planned and advanced. So yes, with this expansion, will we touch 1,000 crores with all the opportunities in place? We will touch 1,000 crores.
Sure, sir. Sure. Thank you so much.
Thank you, Priyesh. A couple of follow-up questions. Tejas, do you have a follow-up question?
No, I haven't raised my hand.
Okay.
Thank you.
Abhijit, do you have a follow-up question?
Yeah, I just wanted to sort of clarify, get a bit more clarification on the margin front. So if we look at the gross margins, both at standalone as well as in Concall, so essentially the cost of raw mat plus contracting plus change of inventory and others. So we don't see much of a margin dip there. So the other expenses which have increased significantly, which is drawing the margins down. So if you can help us understand, the nature of the costs that are accruing here, and probably that will help us understand this delta in margins a bit better. Thanks.
The other expenses keep on fluctuating. Expenses include expenses like freight and forwarding, professional fees. Then our employee costs also, if you see. So that is where our other expenses basically also includes the provision towards expected credit loss, which keeps on fluctuating depending on the increase or decrease in the debtors level as well as the level of our unbilled revenue. So that keeps on varying.
So essentially from say 18 crores in Q1 to 24 crores in Q2 to 29 crores in Q3. I mean, this delta, is there a couple of line items which can explain this delta in terms of either ECL or probably some specific cost related to executions of some
See, now,
order?
those last 2 quarters, we have had very high exports. So where the freight cost has been substantial. So that cost has increased the other expenses. So there are various other types of expenses which keep on incurring.
Okay. And my second question was that given the inflation in raw materials that we have seen, say over the past, 2-3 quarters, so how are you sort of,
Mitigating.
how are you sort of, creating contingencies for that?
Yeah. So typically, whenever we are negotiating any of our orders with the customers, we are aware of what are the raw materials rate at that point of time. Okay. And if we receive an LOI or a purchase order, typically it's the LOI, we immediately block 80% of our raw material with our vendors. So it's an immediate, back-to-back arrangement. On the rest, 20% is easy to manage and we don't find any challenges. This placing of order or blocking raw material slots is done within 72 hours. So there we don't see any fluctuation. That's how we have been mitigating this for the last 2 years.
Got it. Understood. So you don't expect to sort of, I mean, you this margin profile can be maintained irrespective of the raw material changes, you feel, at least for now.
See, the whole fluctuation that you see, maybe 1 to 2% quarter on quarter, maybe raw material may be contributing to it. It's very difficult to say what are the various contributors. The point I'm trying to make is that 80% of it is, very well mitigated. And
Understood.
being in project business, we do some projection as to there could be some fluctuations here and there. There could be other cost overruns. Okay. There could be some unexpected delays. There could be some unexpected challenges. So all these together contribute to that fluctuation, which is not very big, I feel.
Got it. So for example, if I look at your past annual report, I think contract assets less contract liabilities is a significant part of your working capital cycle. I could see in 25 it's almost 106, 107 days. So on that part, which has work has been done, but probably billing has not been made or payment has not been received. On those particular type of situations, if the raw material prices increase, how do you sort of does that get passed on easily, or there are clauses before where you sort of
Yeah. So there is no pass-through mechanism over here because all these orders are on a fixed rate basis.
Okay.
Now, whatever fluctuations you are seeing, that's the nature of business. We operate on a POC basis. And when you say POC basis, the raw material is already into the factory. It is just that it is under some stage of fabrication. Okay. Now, since the overall top line is growing, obviously this impacts the overall work in progress.
Understood. Got it. Great. Thanks. That clarifies. Thanks. That's all from me.
Thank you. Friends, in case there are any unanswered, Dinesh, we can take your question, but please limit yourself to just one because we've run out of time. Ravindra, please share your follow-up question with me on mail. I'll take it up with the management. Dinesh, please go ahead.
Hello, sir. Am I audible?
Yes.
Yes.
Okay, thank you.
Tell
Thank
me.
you very much for my question. Taking and really great set of numbers. Sir, my question is like
because you're normally there among the first guys to ask the question.
Okay,
I don't know why you got delayed.
okay. No, I just thought like, okay, let's give other some opportunity as well.
Right, go ahead.
Yeah, sir, my question is, I see we are catering to different industries, a lot of them across geographies. Any plans or chances that we can get into A&D as well, aerospace and defense, or to a large extent?
Um,
The reason I'm
Well,
asking this is,
it would be on my wish list. I don't know how far it is. As of now, I'm not seeing any opportunities for us. We are too occupied with what we are doing.
Yeah.
But yeah, maybe someday.
Sure. We look forward to that as well. Thank you. That's it from my end.
Thank you, Dinesh. Thank you.
Yep.
Thank you, Dinesh. Friends, as I mentioned, we've run out of time. So in case there are any unanswered or follow-up questions, please send them to us on mail. We'll forward them to the management and revert to you. I'd now like to hand over the webinar to Mr. Lala for his closing remarks.
Yeah, thank you, Naveen. Well, just to summarize, what I can say is that as a team, we believe that the target that we have set, both for the top line and EBITDA margins, we should be able to achieve it. The CAGR of 25% for next 2 years and the EBITDA of 20+%, that also seems to be very much possible. If there's any change or anything unforeseen, we will definitely keep you posted. Both our expansion at Saravali and Pune, and maybe in future at Bonga Strayfield, it should help us in improving or growing our top line, I should say. We are constantly evaluating any opportunities for inorganic growth as well. And so that's all from my end. I think I can just sum it up in these few statements. And thank you so much for being on this call.
Thank you.
Thank you very much. On behalf of all of us at SKP, thank you very much, Mr. Lala, Mr. Khaitan, Mr. Vijayakar, Mr. Monga, and Mr. Karta for your time. And we look forward to hosting you again for the next quarterly call. Thank you very much, ladies and
everybody.
gentlemen, and have a wonderful day.
Thank you very much. Thank you.